Hey folks, good afternoon and welcome to Monday's Market Outlook here at TGO. That's Top Gun Options, really fired up for this week. We're doing our full industry-leading full throttle program. We do this, about 3-4 times a year. We only more or less do it when we have room in the squadron. Here's what I need you to do. If you're interested in where this market's going, because we've nailed it. We know exactly where this market's going. We've nailed that triple top to triple bottom, nailed a lot of stuff, what's going on. And I'm going to tell you where this thing is going and how we're going to potentially profit off of the implosion, explosion, you name it, we're on it. Head to go.topgunoptions.com/FT. Obviously, that stands for full throttle. Go.topgunoptions.com/FT. And this is for free. We're doing essentially a full week of training here starting tomorrow afternoon at 1 o'clock. Today at 1 o'clock, we have a members-only weekly options brief. We're going to be taking a look at the hedge we put on last week. We looked at the Pro Shares ultra short S&P 500, meaning as the market, as the S&P 500 goes down, this goes up. What did I say last week? I said, it's a coming, folks. Next week, meaning this week, is going to be lower. We got, what are we seeing today? We saw Caterpillar implode. We saw NVDA, the chip maker, implode. And the SDS is up nearly 3% right now. We looked at the specific trade was the Feb 8, 37.5, 37. I put this on specifically because I predicted that this week was going to be a clown car, and man, it is Monday, and it is not looking that good. We're at session lows on the Dow, and we're going lower. I'm going to tell you what JP Morgan and Morgan Stanley heavies are saying, and they're more or less agreeing with me. But again, real quick, and just for registering, I'll tell you what, we're going to give you our proprietary OPCL, that's called the Options Pocket Checklist. We usually sell that for $45, and our 7-step trade plan for $55. I'm going to give you both these for free just for registering. And don't worry if you can't attend all of the sessions live. They're all here on the webpage right here. Do me a favor and just register, and you can get access to the replays, which are all going to be populated on that page. More to come. Just register, folks. And do me a favor, share it on social media. Share it on Facebook, share it on Twitter. Be a good wingman with your family and your friends, because we're going to tell you how to potentially profit in this market. Last week, the IMF came out and lowered their 2019 global growth forecast. What also happened last week? China came out and said they had the slowest GDP growth since, you ready for this? I was a junior in college. I hadn't even been selected for flight school yet. That happened a year later. Haven't seen China growth that slow since that long. So is China's 40-year boom coming to an end? We also have bearish positions on what? FXI. That's the iShares China Large Cap ETF, down almost 1.5%. I think we're also at session lows on that thing. This is going to implode. Now, I know we have a Fed meeting this week. We got China trade talks this week in Washington, but we have a boatload of earnings, especially tech, Facebook, Apple, Amazon. This is going to be an absolutely crazy week. But guess what China did? They, again, are jumping in the pool to try and save their capitalism. Some sort of quasi-quantitative easing to keep that Ponzi scheme afloat. And guess what happens to Ponzi schemes? They all implode. It is bearish double vertical time on FXI. And if you don't know what that is, I'm going to teach you how to do a bearish double vertical in full throttle. What else is going on? And this is the bigger picture, folks. Again, the president is doing a great job sailing U.S. warships straight through the middle of the Taiwan Strait, international waters, what the world sees as international waters, around the Spratly and Paracel Islands. And what's China doing? Saying, hey, we're going to sink one of your aircraft carriers, maybe two. We're sending bombers overhead these ships. This is the real deal, folks. China could care less about a trade deal. This is what they care about, is strategic dominance and taking back Taiwan. Trade war, schmade war, it's going to turn into a shooting war, and it ain't going to be good. Hey, come on, Wiz. Be merry. Stocks have started off 2019 with a bang. Some investors are skeptical of the global rally, citing the challenges. Blah, blah. That's me. Sign me up for that. What's going on today? Stocks are falling as earnings woes raise fears over growth. Who said this? I did. Last earnings period, folks, I've never, in about 26, 27 years of trading options and stocks, never seen better earnings. What happened? The market sold off. So what happened this time around? The market's seeing a rip-your-face-off rally on really great earnings? Nope. About average to below average earnings, folks. The chickens are going to come home to roost. What's the head of JP Morgan's co-president says? More market meltdowns like December's rout are coming. Investors shouldn't be surprised if markets behave as they did in December. Markets will tend to overreact to things, and you have these big moves and then a correction to rationality. What did I say, folks? I said cut this triple top and triple bottom, cut or copy and paste it and put it right over here, and that's what we're going to be seeing going forward. How about the Morgan Stanley heavy? Says this January comeback. Dude, hop off now and rest up for the next rodeo. Bulls right now are dangerous animals, and the bull riders should dismount. We've gotten close enough to on a bull that it's becoming increasingly dangerous, and we struggle to see the upside hanging on as long as we can. Meaning, folks, if you did some good work and got into this rally down here at the bottom, the only people that got in right here are dudes at a cocktail party you don't want to talk to. Oh, yeah, I knew that was the bottom right there and got in. They're lying. And, folks, this has not been an institutional rally. This has been a retail, maybe some funds buying, not the dudes I talk to. And when you see a JP Morgan and a Morgan Stanley saying, hey, man, way too far, way too fast, they ain't buying right now. So who's buying? Probably the people that are on this webinar listening to me and need to get into this webinar to listen to me, or otherwise you're going to get shellacked. Remember, go.topgunoptions.com/FT. That stands for Full Throttle. So this is going to get ugly, folks. So this week we got tech earnings, we got trade talks, and we got a Fed meeting. The Fed, they're done, man. Jerome Powell has absolutely blinked. He needed to keep raising interest rates. He needed to get rid of his balance sheet, not necessarily to save time, but Jerome Powell really, really blinked, in my opinion. The VIX, this was from, when's this, 126. This was over the weekend, I think. Volatility index is unusually low. Gold being warms, it's a big week in the vol complex. What did I say this time last week, guys? I said volatility is way too low. Right here. Look at this. Bottom, skimming along the treetops here, I said we are going to see a spike in volatility. Right now, as I'm speaking, the VIX is up 15% as predicted. After this, though, what's going to happen? We start seeing a lot more buybacks, man. The S&P 500, according to JP Morgan, we're going to see like $800 billion in buybacks. Is that going to be enough to keep this market afloat? I don't think so. Apple needs to really knock the cover off the ball, folks. Now, Apple is your serial Wall Street villain, meaning this. They underpromise and overdeliver. What happened 3 weeks ago? Tim Cook came out and said, yeah, things are bad. Apple got pounded into the dirt. And then what did Tim Cook do? He did a softball interview a week later with Jim Cramer that said, wait, I mean, things aren't that bad. Come on, dude. Seriously? So Apple just can't phone it in. March quarter forecast and service comparisons remain at risk, while stock is well above trough valuations. Apple's going lower, folks. I told you a year ago to dump all the FANG stocks. Well, actually, the TFANG. The T's silent. The T in that was Tesla and Twitter. And those two things have turned into an absolute shit show. Tesla last week laying off 7% of its workforce. Look at that. Boom. Predicted it. Told you this guy is spending money like a drunken sailor, and I know exactly how drunken sailors spend money. Ipso fatso me. Facebook ripped off game-playing kids and their parents in multi-year fraud scheme. I saw another Facebook article today. Oh, man, I got to pull it up for our webinar at 1 o'clock. Another absolute clown car with Facebook, some other sort of fraud. It's I'll find it. I'll brief it in our 1 o'clock session. Remember, you're not getting in today's 1 o'clock session. That's members only. We're going to open up the doors starting tomorrow, okay? So today, weekly options members, this is going to be a phenomenal week. If you don't sign up to attend our Full Throttle briefs this week or watch the replays, just kind of don't pay attention to TGO anymore. Fed meeting, China talks, and earnings from tech. This is probably the most critical week I've seen in a long time to test really if this market, as I said last week, I said if we hold above this 50-day moving average, all clear, off to the races. I don't mind missing. I don't have FOMO. right? I don't want retardo and going all the way back down here. So I don't mind missing out on this if we hold this 50-day moving average this week and head higher. Then the all clear is sounded, right? I don't think that's going to happen. I think we're going to smash through this 50-day moving average with some airspeed, and it's 2,600 minimum, and then it's look out below to the December bottoms. If we get a trade deal this week, got it. Rip your face off, rally. But, folks, the damage has kind of been done. Big article on CNBC on the cover about how much this government shutdown, the shutdown cost the economy $11 billion, including a permanent $3 billion loss. And what's his name? Hassett, the president's head of the Economic Advisors Council, whatever his formal job title is, has said that we might see 0% GDP growth, folks, as a result of this government shutdown. Did you hear me right? We had 3% plus GDP growth. Trump was on Twitter every day saying how great the economy was. For Q1 GDP, we might see 0. So I don't know, folks. I don't know if the all clear is sounded, in my opinion, but we are hedged, man. I showed folks last week how to get long SDS. This thing's had a nice rip your face off rally today, and it's heading higher, folks, as I think we're in trouble. We got into this trade last week at 17 cents. It's down here at 14 cents. How many contracts did we do? I forget how many contracts that we looked at. 150. What's that? 3 times 150. Let's do political science math. This trade's already up $450 in a week. And this is serving as a hedge, a trudge to protect your portfolio. All right, guys, I got to get ready for my 1 o'clock week, a 1 o'clock brief. What an absolutely phenomenal and huge week ahead. You have got to come to Full Throttle and tell your friends. Like I said, share it on social media, and at least if you don't, you better be here. One more time, head to go.topgunoptions.com/FT. Take your investing full throttle this week, or at least learn how to put an injection seat in there in case you need it this week. And I'm knock on wood, I'm telling you, you most likely will. All right, folks, have a great rest of your day. Happy hunting. Make sure you hedge. I'll see my members in about 38 minutes, and I'll see the rest of you tomorrow at 1 o'clock for our primary live trade brief right here. Okay, God bless. We'll see you.